Maya is standing in her apartment hallway, thumb over a payment app balance, wondering if January will bring a tax form. She sold 2 concert tickets, picked up freelance design work, and unloaded a couch. The app never asked what was personal. Then she hears the federal 1099-K threshold snapped back higher. Her first thought is dangerous, no form, no problem. The IRS says the federal third-party payment threshold generally reverted to more than $20,000 and more than 200 transactions. That change matters because millions of casual users may receive fewer forms. But the tax roll underneath did not vanish. The IRS is blunt: taxable income must be reported whether or not a Form 1099-K arrives in your inbox. So Maya's real question is not whether a form appears, it's whether each payment was income, reimbursement, or resale proceeds. One approach: sort every app payment by purpose now. Dinner split, rent reimbursement, client invoice, ticket sale, furniture sale. Different buckets, different tax questions. A 1099-K is an information return. It reports certain payments to help tax compliance. It is not, by itself, a tax bill. That distinction is where people trip. A form can overstate profit. No form can understate responsibility. Picture Maya in February opening tax software. She sees no 1099-K upload. The screen feels clean. Her records are not. Thoughtful pause. Consider treating missing paperwork as silence, not permission. Silence from a platform does not answer the tax question. Before the reversal, IRS transition rules had aimed at thresholds above $5,000, then $2,500, then $600. That whiplash created a memory problem. People heard 600, then they heard 20,000. Many stopped listening at the higher number. For 2025 and after, the IRS says payment apps generally report only when both the dollar and transaction tests are met. Both tests is the key. Maya could earn $8,000 across 40 client payments and still receive no federal 1099-K. But the IRS FAQ says all income is taxable unless tax law excludes it, even when no 1099-K is issued. For side work, consider tracking gross receipts, platform fees, refunds, supplies, mileage, and business use. Your net number matters. The IRS says a 1099-K reports gross payments. It does not subtract fees, refunds, shipping, discounts, or cost basis. That is brutal for resale. Sell a used couch for $400 after paying $900 years ago, and profit may be zero. The IRS guidance says taxpayers need records to determine the actual taxable amount when gross payments differ from income. For personal items, one practical habit may help: record what you paid, what you sold it for, and any selling costs. Now separate that from freelance design. Maya's logo project was not cleaning out a closet. It was a service sold for money. Service income tends to be taxable business income. Depending on your situation, it may also raise self-employment tax and estimated payment questions. The IRS says business payments received through third-party networks may be reportable on Form 1099-K when threshold rules are met. The platform sees dollars moving. It usually does not know whether Maya sold a sofa at a loss or delivered client work. That is why gross payment forms create panic. They can make ordinary people look richer than they actually were. If a form arrives and includes personal transfers, consider requesting a correction from the issuer and keeping documentation that explains the payment. IRS FAQs explain that Form 1099-K may include payments that are not taxable, so taxpayers should review records carefully. Maya's concert tickets are tricky. If she sold them below cost, likely no gain. If she marked them up, different story. Consider saving purchase confirmations, resale receipts, and app fee details. The goal is not perfect paperwork. It is a defensible trail. The IRS says payment settlement entities generally furnish 1099-K copies to payees by January 31st when reporting applies. Waiting until then is the expensive habit. By late January, memory turns every transfer into a mystery novel. Quarterly, export your payment history. Tag transfers as personal, resale, service income, refunds, or uncertain. uncertain gets reviewed before tax season. If your app allows separate profiles or notes, consider using them. A clean wall between friend reimbursements and client payments may help. Haft exhale. The danger is emotional. A missing form feels like relief. For a side hustle, it can become a blind spot. The IRS reversal applies to federal reporting thresholds for third-party settlement organizations, not to whether income is taxable. States may have their own rules. Platforms may also make conservative reporting choices. Do not assume every jurisdiction matches the federal line. For local obligations, consider checking your state tax agency or consulting a qualified tax professional. The federal threshold is only one layer. There is no federal dollar threshold for payment card 1099-K reporting when a business accepts card payments directly. That means two sellers with the same revenue can see different paperwork depending on how customers paid. Do not build your tax system around forms arriving. Build it around transactions happening. That is the sturdier habit. Create 3 folders: income, costs, and personal transfers. Digital is fine. Photos are fine. Consistency beats a shoebox scramble. For Maya, the ticket sale, the couch, and the design project do not belong in one mental pile. One framework. Was it a service? Was there a gain? Was it reimbursement? Was it personal property sold below cost? IRS guidance notes personal gifts or reimbursements are generally not payments for goods and services reportable on Form 1099-K. But app notes like pizza, rent, or birthday do not automatically fix bad records. They help only if the facts match. If friends reimburse you often, consider keeping those transfers separate from business receipts. Clean separation may reduce confusion later. The tax season surprise usually starts small: one unlabeled payment, then another, then a spreadsheet built for memory and stress. The IRS says Form 1099-K can be issued even if the amount shown is not the amount ultimately taxable. That is why matching matters. Gross payments are the top line. Taxes usually care about the story beneath that line. For side hustles, consider setting aside cash for taxes as payments come in. The percentage depends on income, deductions, and location. The higher threshold may reduce paperwork, but it also removes a forced reminder. Your record-keeping has to replace the nudge. Set a monthly 15-minute review, rename vague payments, attach receipts, mark anything business-related before the context disappears. Lean in. If you receive a confusing 1099-K, do not ignore it. Consider reconciling it before filing or asking a tax professional. IRS guidance says taxpayers should contact the issuer if a 1099-K is incorrect and keep records supporting the correction. Maya's cleanest move is not guessing. It is rebuilding the year transaction by transaction before tax software makes it feel final. Put a review day on your calendar before year-end. Waiting for a form means letting the platform choose your deadline. The IRS says the old 20,200 standard was reinstated retroactively by the 2025 law change. Retroactive is the paperwork word, taxable is the money word. Those two words solve different problems. If you are unsure whether an activity is a hobby, business, or casual sale, consider documenting intent and consulting a professional. The point is not to fear payment apps. The point is to stop outsourcing your tax memory to them. IRS materials describe Form 1099-K as reporting payment transactions, not determining whether the money is taxable to you. Before filing, compare ACT totals against bank deposits and invoices. Look for duplicates, refunds, fees, and personal transfers mixed in. For used furniture and personal items, consider tracking original cost basis. Without it, proving a loss or small gain gets harder. Maya finally sees the pattern. The missing form was not a verdict. It was just an absent messenger. Her action list becomes simple: separate, export, document, review, ask for help when the facts get messy. That framework may help whether you make $500, $5,000, or cross the reporting threshold entirely. If this saved you a January headache, follow Money Moves daily. We keep the paperwork practical and the panic out of it. Your takeaway: The threshold controls platform reporting. It does not control whether your side hustle income exists. Forms are reminders. Records are evidence, and evidence is what helps you file calmly when the app stays quiet. This content is for educational and informational purposes only and does not constitute financial advice. Always consult with a qualified financial advisor before making investment decisions. Until tomorrow, keep your receipts, know your buckets, and remember, no tax form does not mean no tax question. Remember, this content is for informational purposes only and is not financial advice.